Hello and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct on Dukascopy TV, where we speak to market insiders on some of the hot topics impacting APAC markets. My next guest says that St George Bank sees the Aussie dollar trading at 73 US cents by year end. For a little bit more information, I spoke to senior economist Janu Chan. Janu Chan, welcome back to Dukascopy TV. It's a pleasure to see you again.
Thanks, Natalie. Thanks for inviting us again.
No problem at all. Okay, so let's start. Firstly, the high importance read of the week in the Australian economy is that retail sales number on Friday. Now, this is a great figure, not only in terms of consumer spending, but also general feelings about that disposable income and overall wealth, I guess, really. Where are you pitching Friday's release?
We're expecting a 0.3% increase. It's not an overly strong increase, but it's still growth. We're looking at maybe modest growth in retail spending over the next few months. We've got support from low interest rates and rising house prices, but at the same time, consumers are probably feeling a little bit cautious given that income growth isn't very strong.
Now, we've also got building approvals coming out, again another high importance release. What sort of picture is this shaping sort of overall of the Australian economy at present?
Yes, it'll give us a great read on how the housing is performing. We've had some mixed results from some other bits of data. Auction clearance rates are coming off. We've also had home lending growth has softened there. So it'll be interesting to see where building approvals is going to guide us in terms of the picture for housing construction. It does, in our view, we're probably close to a peak, but we do expect a bit that housing construction is going to stay at quite elevated levels over the next few months and over the remainder of the year.
Touching then on the Australian dollar, we've seen slips really in the local currency on that uncertainty over US Federal Reserve policy, fueled even more so by, again, elements like China's uncertainty. These are long-term events. These are not concerns that are going to go away anytime soon. Therefore, what does that mean then for your outlook for the local currency?
Well, yes, these are concerns that have been there for some time and are likely to continue for some time. But we think at this point in time that some of those concerns regarding China might be a little bit overblown. That's why we've maintained our Australian dollar forecast at 73 US cents for the end of this year. We've had that forecast for a long time now, and we're reasonably comfortable with that forecast still. We think that now, of course, there are some downside risks while these concerns do linger about China and uncertainty about when the Fed's going to increase interest rates. It's going to create quite a bit of volatility in currency markets. So, these factors could keep the Aussie dollar away from our forecast, but given the fact that, look, China, its growth is slowing there, but we don't think it's slowing at a really alarming pace, and at the same time there's a big lot of stimulus that authorities have put in, and I think that could take time to filter in. So that's where we see the Aussie dollar.
Now, one of the last things I wanted to touch on, one of the big headlines that we've seen really has been ANZ's interest rate rethink that they've had, forecasting 1.5% new record low interest rates from the Reserve Bank next year. How does this line up with St George's outlook?
That is, in our view at St George, we're expecting the RBA to leave the cash rate on hold until late next year. We do recognise that there are some risks for the domestic economy. Mining investment is probably going to detract more from growth over the coming year. We've got housing construction, which isn't going to add too much to growth, and the non-mining sector there aren't those signs that it's going to provide pick up sufficiently to make up for that decline in mining investment. So, look, there are those risks, but we can be positive about the outlook because the Australian dollar is now so much lower, and that can provide a really strong boost to the economy along with low interest rates. And the other thing which is a bit more positive than what we would have thought is the labour market, and these factors could mean that the RBA will leave interest rates on hold.
Jenny, thank you so much. Always a pleasure to receive your comments.
Not a problem. Thanks, Natalie.
Always a pleasure to receive Janu Chan's insight. I'll be back with plenty more exclusive interviews for you right here from Sydney, Australia. For now, though, it is goodbye.